Ladies and gentlemen, welcome back to the channel. Today is Saturday. That means markets are not open. So there's not much in terms of news. There is actually some bad sounding news of the EU retaliating against US tariffs. And we'll get to that here in this video. I want to share with you a clip from CNBC from Wells Fargo's Chris Harvey. He is the highest price target on this market. Guess what his price target is? 7,007 on the SPX. On the S&P 500. That on the SPY is almost exactly my price target. I didn't even know this before I watched this clip, but I think he has the most logical approach to this market. I think me and him would see very, very much eye to eye, which is unusual right now from a Wall Street perspective. Even, the host of CNBC says, this is by far the highest price target on Wall Street today for the S&P. Because most people are not looking at this market the right way. So he thinks there could be a 20% rally into year end. I do as well, not just for confirmation bias. Again, nobody's saying these things. Nobody is, looking at this market from a logical perspective. They're looking at this through emotions and fears. So we'll get to that clip here in just a few moments, but let's start with your breaking news. Now, in the news today, this morning, the EU Commission spokesperson says that the EU is ready to impose countermeasures, including in response to the latest US tariff increases. And again, it says the EU is ready for retaliatory actions against US tariffs. The EU Commission spokesperson says, "We strongly regret the announced increase of US tariffs on steel imports." EU Commission spokesperson says the tariff increase also undermines ongoing efforts to reach a negotiated solution, which is true. I mean, it'd be like if you were trying to avoid a fight with somebody and they punched you in the face. What choice do you really have? So in all fairness, I mean, the EU's not wrong here. Also hitting the headlines today, Canada's jolly responds to US tariffs with retaliatory actions. Canada imposed a 25% tariff on $155 billion of US goods, starting with $30 billion on March 4th. So they're kind of just reiterating that they've already taken some action. Now, Donald Trump says that Chinese students coming to the U.S. will be fine. He says that Pakistan representatives are coming to the U.S. next week. Trump says that Japan wants to make a deal with the U.S., but that he has yet to approve a final deal with Japan. And Donald Trump says that the United States steel will remain under American control. Fed Daily says that April's PCE was a good relief, but incomplete as a picture. Trump says that US cars would be made with US steel, and he is urging supporters to encourage senators to vote for the tax bill. He also says we are on the brink of passing the biggest working class tax cut, which again, I would say a good chunk of this workforce, especially lower income earners, have been in a recession for 3.5 years. Getting them some relief, like no tax on tips, no tax on overtime, if that can go through, is going to go a long way in helping this economy actually recover, like the average working person to recover. Now, I'm going to share with you this clip from CNBC yesterday. It says equities can return double digits in the second half of this year, says Wells Fargo's Chris Harvey. This is something I really need everyone to understand, okay? Wall Street is only focusing on what could go wrong right now. They're not focusing on what could go right. And I think there's a lot of things that could go right, including the tax bill. Yes, we already know about the deficits and blah, 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 and the debt and all of that. But they're not focusing on the 70 million, U.S. Americans that could start to come out of a 3.5-year long recession with the tax bill. They're not thinking about what trade deals could actually do to company earnings. I'm sure both of those things in the end will be a positive. They're not considering what trade deals could mean for inflation. They're all worried about inflation, we may not see inflation. We may see stronger economic growth, specifically coming from AI and enhancements in productivity. Okay. Nobody is thinking about that. And as some individuals like Tom Lee and Ryan Dietrich have talked about, next year looks like it should be really good. What a lot of Wall Street forgets, it's not about right now. Things could be bad right now. Theoretically, they could be terrible right now. If Wall Street starts to assume that next year is going to be a good year, that's what markets recover on. Markets are forward-looking instruments, okay? And I think as we get deeper into, this year, second half of this year, Wall Street's going to start to realize, oh crap, next year is going to be a good year, so we should invest in markets. Wow, like crazy thought, right? And that's what you need to position for right now. So take a listen to this clip.
Market participants as well. Our next guest tells us today tariff risks are priced in, if not overstated. Here to discuss, Chris Harvey from Wells Fargo Securities. It's good to have you back, especially as we have these new headlines. What's your reaction given your own headline today that it's all priced in?
I do think it's priced in. You're going to have volatility. We're having that volatility. But at the end of the day, we're making progress on trade and tariff. We'll continue to make progress on trade and tariff. We'll take a step back every once in a while. Today, we take that step back. But as you can see, things didn't really stick. And the Trump administration does want to move things forward. They appear to want to make them push the ball forward. And I think that's a positive. We're now at the point where I think we're going to start to hear some real tangible results over the next couple of weeks.
You've been steadfast in your belief that this market can have a good second half. Yeah. You refuse to move down your target, which I always cite, and you always smile when I do, because it's 7,007. It's by far the highest on the street. And you think that something close to that is still possible or not?
Yeah, I think so. I think we could see double digits in the second half of the year. I think one of the things that really surprised me in recent weeks was what Waller said. Waller comes out and says, hey, if tariffs are only 10%, we can start cutting rates. Tariffs are more than 10%, we're going to have a problem. That was a really interesting statement. And I do think that's where tariffs end up, in a 10-12% range. That was our initial thought, and we're getting more and more comfortable with that belief. And if you hear him, if you believe what he has to say, that's really constructive. And at the end of the day, when we talk to clients, when we talk to people, they're fearful of a lot of things, but when you push them on the fundamentals, they're like, hey, the fundamentals are okay.
You describe, that suggests the president can have his cake and eat it too. He can have his tariffs at 10% and get the rate cuts that he's been pining for. And maybe he did when the Fed chair himself was sitting in the White House yesterday.
I think so, right? So the reason why we said 10% is with 10%, we think about a third will be eaten by the importer, a third will be eaten by the corporation, and a third will be eaten by the consumer. That's not a big impact. And what's really interesting is now you're getting revenue, now you're having revenue that can start to balance the budget. That's a real positive, real constructive thing, and we'll start to see the benefit of that as we go forward in time.
What if China doesn't back down? What if they don't want to do a deal as fast as you think maybe the White House needs to?
I don't know. So I think it's more important that we get deals on the table with India, with Japan, with the EU.
More
North
important
America.
than China?
Yeah, I think it's more important than
Why?
China. Because what we're in the process of disintermediating China, right? And what we're saying to our allies is, if you want to win, if you want to enjoy the spoils of that disintermediation, then play ball with us, right? We're not going to stop doing business with China, but we really want to. The administration is trying to make it very difficult to do business with China. And when we listen to the conference calls, you are hearing companies say, hey, we're removing our exposure to China. We're moving business out of China. It is working. They are making progress in that endeavor.
What's the rub down? I mean, what potentially upsets your narrative?
What upsets my narrative? Really simple. One of the things that we keep saying is, if you don't know, you know, right? The uncertainty is still gnawing away and still eating at people. If we're here in June, July, and we're still saying we're not sure, we haven't had enough progress, then you know. And then people will start to say, hey, maybe we need to resize our workforce. You start seeing a resize in the workforce, then things start to fall apart.
But you actually think that by June, July, we could have enough clarity on the trade front that we can focus on tax cuts, dereg, and all the other stuff that's supposed to be stimulative to the economy?
Well, I think we're already focused on tax tax cuts. We already have a good understanding of what's in there. There's a lot of talk, and I don't think it's going to be done by July 4th, but there's talk about it being done by July 4th. I think you have to have some progress with trade and tariff. If you make that progress, and if it's of size, again, if you see in Japan, if you see in India, then you can start to extrapolate out. Then the market starts looking through things. They start looking through any sort of economic slowdown or weakness, and then we start looking to 26, not at 25.
Wow, that clip was even better than I thought, because my year-end price target on the S&P is 700 on the SPY. So is his. I think that was the most logical take on markets I have heard in a very, very long time. So let me know what you guys think about this down below in the comment section. Have a great rest of your day, and I will see you in the next one.